Hello everyone and welcome to the webinar. Give me 1 second while I pull out my charts. Okay. Can everyone see my screen and hear me? Okay, just making sure. So, what we're going to be talking about today, well, today is Sunday, August 14th, and it's 6 p.m. Central right now. So that means it's the Tokyo session that is beginning of this week. So what I'm going to do is always coming into a new week, you always just want to look at the weekly chart. Because it's a new week, you want to see where we're beginning in the week. And what I'm going to do is set a trend line right here, right now, because this is where the session is. Okay. Weekly, I have so many damn trend lines on this trade or on this currency pair right now, because it's just a clear downtrend. There's so many easy indications that's telling me that it's going to continue to fall. One thing is this pattern right here with it's 3 black probes. I'll be doing a webinar explaining what that is as well. It's just a reversal pattern that on a weekly chart has 3 in a row going in a clear one direction. So for example, right here, 1, 2, 3. Next week it just plummeted. Same thing, 1, 2, 3, bang. 1, 2, 3. It fell, but it didn't fall as much. It still fell. If you guys see what I'm saying. So usually when you see 3 weeks in a row, just as here, it's going to continue in that direction as long as the monthly, weekly, and daily chart are going in that direction. So look at the monthly. Clear downtrend right now. Clear downtrend. Let's look at weekly. Weekly, what we're looking right now is just as soon as this weekly candlestick drops below this low, this price right here, the 130.7, we're in the clear for months of more profit. You look at the monthly chart. It could do what it did this month. It can drop to 123. It can drop to 119. You don't know how long a month of movement for a currency pair can go for. Like starting from right here. Let's say you got in a buy right here a couple years ago. You just kept it into here, and you never know. I can hold one of these dollar lots that I'm in right now for a whole year if I want to. And let's say it catches 1,000 pips. Well, guess what? I make $10,000. See, Forex is all about long-term investments, guys. You want to make profit short. Like I started this account at $300. Okay, it's at 5,000, a little over 5,000, and 1,200 in profit right now. A lot of these trades are, look at this, the third trade. This is a 0.03 GBP NZD. Look at the price I got in, 1.86. Look at the price now, 1.79 GBP NZD. This is where I sold it on the 4-hour chart. Okay? The pound is extremely weak long term. As soon as I saw on the monthly chart that this monthly candlestick broke through this EMA right here, the 50 EMA, I said, it looks like the pound is really decreasing in value, and the New Zealand dollar has been going up in value. I can also show you, looking at the New Zealand dollar to the dollar, it looks as from here, the New Zealand dollar kind of made a reversal, kind of did like a plateau with it from here, and it came straight up. From here, this whole year, it's just been an uptrend against the dollar. So that's telling me if the New Zealand dollar is stronger than the dollar this year, that's telling me that, you know, the dollar is a strong currency, but the New Zealand dollar is even stronger. So I'm going to put in a sell on GBNZD just because I know that the pound is weak and the New Zealand dollar is strong. I put a 0.03, and guess what? I'm up almost $150. That was two weeks. I'm up on this one trade $150 from a 2-week trade that is a 0.03, and I never even had to look at it again. I can hold it until it gets to here. I'll be up 500, 800. You know, look how many trades I have in though. See how these are up 23, 24, 31, and they're all 0.01s, 0.1s, 0.03s, and then the biggest ones are the 50s and 10s. But what I do is, for example, the two trades that I'm in right now that are big lot sizes are Euro GBP. I'm going to show you guys the 1 hour charts, because when you're talking big lot size, you want to look at small charts. And if you're talking, 0.03, you want to be looking at weekly and monthly. But if I'm in for a 50-cent lot and a dollar lot on Euro GBP, let's look at the 1 hour. Okay, here is our buy right here. Okay, what I saw this is I went to the weekly chart and I said, it crossed this high right here, and it's a clear uptrend. What is telling me that this is going down? There's no way this is a downtrend. You see the clear trend. Oh crap, wrong line. You see from here to here, it's definitely above the current price. I mean, the current price is definitely above it. Okay, and you also could do this. You set another trend line from here to right here, because this was another level, and it's definitely above it. It's above the moving average, the 50 moving average, 200, above the middle Bollinger Band on the weekly. So then I go on the daily and see, I see 5 green candlesticks in a row. It has to keep going up. Well, why would it go down here? It looks like it's just going to continue an uptrend. 4 hour. 4 hours is just continuing an uptrend. 1 hour. So what I did on the 1 hour was this. I said, I'm going to draw my trend lines, okay, and see where it respects. Okay, so 1, it has to go through this price, because this was it's this price. It's the past weekly high. Okay, and then I'm looking at this trend line and saying, it needs to stay above this for it to buy. I'm looking at this trend line. I'm looking middle Bollinger Band. I see this. This 1 hour candlestick on Friday. I mean on Thursday night, but Friday morning from London session. Look what it did. This London session, this was 1 a.m. So this was Frankfurt session. It stayed green. And usually, if you're coming into a session and you see a clear trend, for example, this daily uptrend, you have to go with the trend. There's no reason to sell it and go in the opposite direction. One, for good reason, is my favorite indicator, Bollinger Bands. It is above the middle Bollinger Band. And this 1 hour candlestick was London. Okay, so as soon as you see this candlestick the 1 hour was going in the direction of where the trend is going, and then as soon as you see this buying, that's when you get in. So you'd look for entries as soon as this price went above these 2 candlesticks right here. But if you see where my price got in, what I did was I saw the 1 hour was gonna buy from this price, so I went on the 15-minute, and look what came. This is a perfect example of a 15-minute Doji reversal candlestick. Okay, so on the 15-minute, it drops a little, and that was that 1 hour coming into London. Okay, the Frankfurt session, the hour before. The next 15-minute has a railroad track. What this railroad track is just a reversal pattern. It's saying, if it were to fall, this 15-minute would just be red, would be a lot smaller, or it'd be a lot more red. And the next one, if this 15-minute candlestick was red, that would indicate that it's going to fall somewhere. But look what it did. It made a doji, and a doji is just this formation right here, this little cross, and it's green, indicating that it finished a little higher of the price of where it started. And then look what happened ever since. It passed the middle Bollinger Band on the 15-minute, up, 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 and now it's going to continue uptrending. And look, now we're in a new week. We're on Sunday. I have a dollar lot in this trade. I'm already up 40, around 40 pips, and my stop loss is at this price. So look, it says drag to modify, 0. My stop loss is there. See, now it's here, now it's there. Now it's on the exact same price that I bought it at. So at this point, I have absolutely nothing to lose. And what I'm also going to do is, for example, let's say this weekly chart is going to continue going up. Okay, let's say on Wednesday, I see that it's still an uptrend. On Wednesday, what I'm going to do is I'm going to move my stop loss to the low of this week. So I'm going to move it to this price. Okay? So all I'm doing is slowly moving it up, and then at one point I'll have at least 50 pips protected in profit, and at that point I will never touch it again. Because if you automatically catch 50 pips and lock those in, and then let's say you want to hold this trade for the next month, I could potentially make 700 pips, 400, 1,400 pips, even more than that. Look at the monthly chart. I'm going to zoom out here. One more. The monthly chart for Euro GBP looks like it's doing the same thing it did here, and it's skyrocketed. Came to a plateau right here, skyrocketed for a whole couple of years. Look, if I hold a dollar lot, and then let's say it comes to here, it goes above this price, it goes to 0.98. Okay, that's 1,200 pips. That's a good amount of money. I'm already up $566 on it, and that's only 1 day of movement or 1.5 days of movement. You guys understand? This is long-term big money, monthly and weekly charts. When you're able to have equity, you know, for example, I have $5,000. I would never recommend a dollar lot size for any account less than $3,000. Okay, but if you have a $300 lot, $200, you can do 0.03s. This 0.03 you could have taken in your account. Let's say you had a $300 account. You pretty much made 50% of your account on this 1.03 trade because it's almost around $150. And that's how long-term trading really makes you get a good percent ROI in Forex, because Forex you can hold trades as long as possible. When you have a stock, you get out of the trade because the stock hit a big price. You know, it goes from $30 to $49. You know, in Forex, something can go from, you know, since there's so much money to be made and so much leverage and so many pips in every trade, you can make thousands of ROI while you're just waiting for the trade to continue its monthly trend. You know, because these can trend for months, trend for years. Let's say you got in a buy right here on Euro GBP, 0.69 to 0.86. Okay, that's thousands of pips right there. Does anyone have any questions? I'm gonna show you guys GBP JPY and also show you, you know, it's just a clear downtrend. You know, why would you buy this? There's no point of buying this at all if you see that this huge red candlestick indicating the Brexit results were so horrible for the fucking pound, and then you know that the yen is downtrending against every other pair. So to me, I'm just gonna keep my eyes on the 4-hour and say it's just gotta continue dropping slowly. If it comes to this price right here, it may come up a bit, but we're talking weekly and monthly wise, it's going to fall for the rest of the year. So did anyone have any questions? What does it mean when the Bollinger Band expands like that? On the last pair, Euro USD pair. I was looking at Euro GBP. I'll go back to it. So Bollinger Band's expanding, okay, on the 1 hour. So what it means is that, okay, so look right here. You see how these are pinched right here? Look at how all these 1 hours right here just ranged. They all stayed within a certain price, like they stayed from this price to this price, which is a really small movement for a lot amount of hours. Okay. Look what it did right here. This 1 hour closed above it, but look what the next 1 hour did. It closed above it as well. Look at how it pinched here. This one went above it. This one, the next candlestick was red, so you wouldn't buy it at that point. So it came back down. Okay? This, you see how this candlestick went up. The Bollinger Bands expanded. Okay? And then this green candlestick stayed above the high of the Bollinger Bands. And look how expanded it is right now. And it's above the middle band. Like, for example, right here, you see how expanded this was? It was telling you to get in this buy right now. If you bought it right here, and it's saying bang. Usually when it crosses the middle Bollinger Band, it stays above it for a whole hour, like it did here. It's an indication for a reversal, for if it's continue. So because this was a downtrend, and then this 1 hour stayed above the high of the movement of the Bollinger Bands, and then it continued an uptrend. When they're pinched, it just means that they're ranging, like from here. It means when they're pinched, it means a breakout has to happen. Look at all these breakout movements. Okay, I'm gonna click on them. All right. Okay. Here. Oh crap. I can just let me see. Okay, here. 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 You guys see how every time they're pinched, and then they expand. They pinched, and they expand. And then every time it expands, that's when the breakout happens for the trend to continue. When you see something like this, because look at the 4 hour. We'll zoom out. The 4 hour literally just exploded. And look how it completely, because it was, at this point, it was kind of just consolidating. As soon as you see this, it's an uptrend, because it's just a clear reversal, and it went up. All you're looking for is for a 1 hour and 4 hour to close above the Bollinger Bands. So right here, it didn't really close above it. This red candlestick didn't close above fully, and it's also red. Okay. Here, a red candlestick closed below it, but the next one was still above it. The majority of it was above it. And look what happened. And then it continued its uptrend. So you're really looking for 1 hour on Bollinger Bands. You're really looking for just 1 hour breakouts that will show you where the trend is going. So like here, you see how they're pinched right here in this area, and then you see how it breaks through the high. At this point, if you would have had a buy right here, that would have been a great price. That would have been a better price than what we got it. And then same thing. Now they're pinched here, they're pinched, and then look, it crossed past the middle. And then I knew since it was a buy, I had to get in right here because it respected this trend line, and it was above my moving average and my middle Bollinger Band. I got in, and then look what it did. The next 3 candlesticks were just clear green. This one up, and then this one went above the high Bollinger Band, and this one stayed above it. So that's indicating to me that the trend is going to continue, and we're also coming into a new week. So the whole week's movement of pips, if it's an uptrend, will go up. And every week moves anywhere from 300 to 900 pips. So if let's say it goes 600 pips, I'll be 640 pips in profit at the end of this week on a $1 lot. So I'll be up to 6,400 on this trade. And that's long-term trading, guys. Does anyone have any questions? Any more questions? All right, well, right now, since no one has any more questions, I'm just going to show you what pairs you should be looking at. And if you're not in this Euro GBP buy and this GBP JPY sell, I would advise to be in them. Forex Secretary gave out a signal on Thursday to get in them. I hope you did not close out all your entries and are still in them as well. I'm also in a Euro JPY sell, just not as heavy. But the main ones are GBP JPY and Euro GBP. Just waiting for them to continue the trends and slowly move my stop losses to a point of where I automatically make pips and to where I don't want it to hit my stop loss. Any last questions, guys? Can you do an example? Ask as if you taking entries. Okay, if I was taking entry right now on GBP JPY. Now Euro GBP looks better right now, to be honest. But since it is Tokyo, I would do GBP JPY. If I were to enter right now, I would look at the 4 hour and say, okay, the 4 hour, I'm going to put my stop loss right here. I'm going to put it above the top of the past 4 hour. So go to the 1 hour. I would get in right now. If I'm getting in, I would, I'll just do it with a 0.01 for. Okay, 0.01. Okay, this is what you do when you're taking an order and you want to have everything pressed in on your order thing right away. You go to File. Okay. I apologize. I was focusing on the trade. You go to Tools, New Order. Okay. and this will pop up. This will pop up. You're going to top the volume. That's going to be your lot size. Okay. Market execution. And then you're going to do this, whatever the stop loss you want it to be. So if I were to getting, let's say, a higher lot size right now, I would put a small stop loss. So let's say this is $1 lot, I would do 130.921 as a stop loss. You can set a take profit, but you usually just want to start out with just stop loss and see how the trade goes before anything. 130.921, and then click sell my market. Okay, pops up right here, and the stop loss is right here, and then you can just drag it to wherever eventually. But for now, we'll keep it there. And that's just the reason why I'm not taking a big lot size, is because it's the beginning of the week. So if this has to retrace on this drop that came off last week. So let's say it does come up, it might come up to this area, but my $1 lot, my stop loss, since it's right there modified, I can't lose anything, but I don't want to be negative $500 on a $1 if it does come up, because I know this is a downtrend, but I'm already in profit. I already have entries up there. Why would I do more entries for a pair I'm already in? Does that make sense? That help, Casey? Should I repeat those trades again? Trades are Euro GBP, the first two that are on my. This one is for a buy. This one's for a sell. Both going against the pound. And see, now look on the 5-minute. It kind of does look like it's going to sell right now. But I'm not going to. The thing is, there's no point of getting in this trade right now if you're already in it from last week. Like, look, I already have a sell right here and sells up here. So what would be the point of me getting in this trade right now when I can just protect anything? Like, right now, I can make money on this trade, or I can make zero because it can hit my stop loss. I don't want to put myself in a situation to lose money on this currency pair just by getting in another lot size and losing money right now. I'm going to hold these out for as long as possible. This account's already over $5,000. I made thousands of % ROI on this account. So you guys got to think like a trader. You just want to make your money and get out, and then put long-term entries, and then just suck out as many pips as you can for as long as possible, and then use that profit to have more equity and to put into more long-term trades. Make sense, everyone? Anyone have any last questions? I'm about to go eat. And that, if you are getting in these trades currently, what I would recommend is putting your stop loss where I just showed you, at 130.921 for GBP/JPY. If you're in these trades, just continue to hold them with modified stop losses for the next 3 to 4 weeks, for Euro GBP and GBP/JPY. All right, guys, we'll see you at the next live trading session. Keep watching. There's going to be new material coming out next week with multiple webinars. This will also be uploaded in the back office if you want to rewatch it. So everyone, keep studying, keep progressing, and demo for as long as you need. Success in Forex takes time. It will not happen overnight.